Hello, Oracles. Today I'm going to break down some notable dividend increases and changes from last week. Again, I'm going to be doing this every single Monday. And if there's any other stocks that you guys want me to follow and track as well, please let me know in the comments below and I'll put those in there. So these are just some of the ones that I own or some other ones that I know are kind of popular in the community. And I'm really just going over any dividends that have changed up or down, anything that just kind of gave us an X date or saying, hey, they're going to be doing a normal dividend. Not really going to note those because they're just going to be normal dividends and no big changes there. One thing I wanted to mention as well, I totally forgot to say it yesterday. Another thing to expect this week is we do have unemployment numbers coming out on Friday. Those are going to be significant. Again, something we have talked about going over the last couple of months is we saw unemployment kind of creeping up. We know at this point that inflation is basically squashed, and the only other concern for the Fed is going to be unemployment. So we saw those numbers coming down, but we had a lot of questions about those September numbers when we got them, just because it seemed like the government numbers were a bit inflated potentially on a seasonally adjusted basis. So kind of wanted to see if there's going to be any adjustments taken for that, or if we're going to see something going in the other direction. Because if you adjusted those numbers out when it came to the seasonally adjusted government numbers, we actually saw unemployment going up. So we really haven't heard a lot of talk and discussion about that lately. The market has been continuing to climb up. So I really want to pay attention to those numbers coming out on Friday and see which direction we are moving, because this is going to be the last unemployment numbers we get before the election next week. So we'll see what they look like and we'll go from there. But that could be another thing that moves the market this week. All right, now before we jump into those dividend changes, please don't forget to hit that like button down below, subscribe to the channel. And I do have a business that I just jumped into, so I'm going to be giving out all of my members and patrons some discount codes. That's part of the perks that you guys have as members and patrons, is different discount codes. So I've got a 5, 10, and 15% discount code. So I'll be throwing those out there and I'll see what's going on. And then what I'll end up doing when we get to like holiday times is I'll throw those discount codes out to everybody. And if you guys are more interested in that, it's not something I can mention on here. The algorithm doesn't really like it all that much. But if you want to check out my Facebook business page, Oracle Health and Fitness OCR. And you guys can see more about it over there. All right, so moving on to the dividend changes from last week. So last week we've got the YMAX ETFs, and we've got some other ETFs that pay out on a weekly basis. So those are going to be a staple that come out. Sometimes they go up and sometimes they go down. These do fluctuate quite a bit. So this time around, YMAX went from about 17.5 cents up to 22.5 cents. So a nice little bump on a weekly basis there. And again, fluctuates a lot. So just because it went up by 5 cents this week doesn't mean it's going to continue doing that. So make sure you take that into account. We had WDTE went from 25.33 to 25.25, so basically staying the same. And QQQY went from 27.62 to 27.41. So again, also staying about the same. So these two here, I'm just kind of paying attention to. And again, the weekly payouts, I'm paying attention to NAV erosion on all of these to see if it's going to accelerate it. Seems like it's not really doing a lot at the moment, but again, they just switched over to weekly this past month. So I'm going to monitor them going forward. I am looking to add one more ultra yield ETF to my portfolio as we get into next year. Going to wait and see how the economy is looking at that point. Going to kind of see what my best options are. Obviously, NAV erosion is a big concern of mine. So I'll make sure that I'm going to be picking something that, even if I sacrifice a little bit of that dividend yield, I'm going to be gaining back a little bit of that NAV erosion and don't see as much of it as quick as some of these other ETFs and stocks that are out there. Because for me, I'm just doing this as a very short-term play to get that income generation coming in. So far, I've been successful with all of them. And despite NAV erosion, I am still on the positive side with them. But I still want to make sure that, especially if we are going to get into a potential recession, they will recognize the entire downside of this, and that could squash them entirely. We already saw TSLY. We saw that one do a reverse stock split. So right now it's kind of balancing off with Tesla performing well, but again, a little leery from here. Don't want to get into that one. And there are others out there that are showing massive NAV erosion as well. So again, something to really pay attention to, and I'm going to be looking to get Darth Dividend on here to get his insights into some of those as well if you guys are interested. And one other one that I don't own, and I didn't check the change on it, but we saw AMZY, because this is the one that is number one on my list to kind of buy into for when the year turns around. Just something I'm watching. Again, it's on my watch list for the ultra yield ones. That one came in at 76 cents per share this month. Now for one of my BDCs, my absolute favorite BDC went up by 2% on their dividend. Now, again, you're looking at something I had discussed previously and said, you want to make sure that the dividend increases that you see on your stocks are going to be higher than inflation, and they're going to be higher than what you could potentially be getting at your job, which inflation's about 2.5 to 3%, and a job could be 3 to 5%. So coming in at 2% for Maine, MAIN, isn't all that great, but don't forget they pay on a monthly basis. They also pay out a special dividend on a regular basis, and they can increase their dividend multiple times per year. So Maine going up 2% this time doesn't bother me because we've already seen several special dividends get paid out this year, and we have already seen one other increase this year. So for me, 2% means nothing, but they went from 24.5 cents to 25 cents per share. Love Maine, one of my absolute favorites, and I'm just going to continue to add to them going forward. And even though I love them as much as I do, it's one of the things to pay attention to when it comes to BDCs in a recession. They will have a difficult time with a recession, so something I'm going to pay attention to. I still think Maine will be perfectly fine going through it, but just one of those ones that I absolutely love it, but just want to pay attention during a recession. And the last one with an increase is Starbucks, SBUX. They went up 7% from 57 cents to 61 cents last week. Now, they gave out their preliminary numbers. They have their technical earnings coming out on Wednesday this week, but we got their preliminary numbers and they were not good. It was an absolute terrible quarter that we had seen, and they didn't share what they were going to be giving for guidance for 2025, citing that with the new CEO coming in, they want to see what groundwork he's going to lay for improvements before they give any guidance for next year. The stock sold off and then basically rebounded, and we're pushing back up even higher this week. So it's one of those things where, just because a stock sells off after earnings because of bad earnings doesn't mean it's going to stay there. So that ended up being a good buying opportunity for the near-term dip. But another thing that this shows as well is despite the fact that you may have a bad earnings, you can still see dividends going up. And this is phenomenal to see. So one of the nails in the coffin, and we saw that with Intel, is you cut your dividend, it's game over. That's one of those, nails in the coffin for a lot of these companies is if you cut your dividend, you're pretty much done. Now, we did see that happen during the housing crisis. We saw a lot of banks cut their dividends, and they have since rebounded since then. But other companies like an Intel, and it sounds like, and I did mention it on yesterday's video, talking about how when it comes to Intel, we might be seeing a company buying them out. I was guessing maybe Apple, Microsoft, or Tesla. Turns out it's Qualcomm. Qualcomm is looking to potentially buy out Intel. So we will see what's going on with that in the future. But that's the only hope that a company has when it cuts dividends and they see things going south like that, is getting bought out by someone else. And so looking at a company like Starbucks, they've been struggling over the last year and a half. Sales in China have not been doing well at all. Sales in the US have been struggling also, with inflation going up as much as it has. So seeing them having a bad quarter but still going up on their dividend shows that they are still confident in the future of the company. And now with the new CEO coming over from Chipotle, who did wonders for them, let's see if he's going to be doing wonders for Starbucks as well. So it will be interesting to see what he has to say on their earnings call on Wednesday to discuss his plans for the future to see this turnaround. Now, seeing the stock kind of building up going into their earnings on Wednesday leads me to believe that maybe there's some murmurs going on behind the scenes, that people understand that the CEO is going to be making some massive changes, and they seem like they're going to be pretty positive for Starbucks. I truly don't know. That's just speculation on my part. Again, looking at it long term, I think they're going to be fine. That's just near term speculation. And if you're a swing trader, maybe it's something to swing trade off of. For me, I'm just looking at the fact that fundamentally they increased their dividend by 7%. That is still an increase year over year. Now we'll see what the CEO is going to be doing for next year, because if he does for Starbucks what he did for Chipotle, we might even see double-digit dividend increases coming next year and going forward, and these could be some great buying opportunities now. Just things to think about, things to pay attention to going forward. On the other side of things, if we get into a massive recession, their sales could come down significantly, and maybe they do a smaller dividend increase next year. So just to kind of play both sides of the coin, because these things do go into my head and I want to share those thoughts with you guys. So that's really all of the major changes I saw in dividends over the last week that came to my portfolio and other things that were on my watch list. Again, if you guys have any dividends or any changes that you saw over the last week that I did not mention, please put them in the comments below. I will add them to the list as things to pay attention to. Or if there are other stocks that you think are coming up that may end up changing their dividends, like I think ExxonMobil might end up increasing their dividend coming up this Friday, we will pay attention to how that changes as well. So if you see any that you have that you think are going to be anticipating a change in their dividend, please share them in the comments also. So that's all I've got for you guys. Please don't forget to hit that like button down below, subscribe to the channel. And again, if you want to check out any of the product that I have to sell that is coming out, check out my Facebook business page, Oracle Health and Fitness OCR. Otherwise, thank you guys so much for watching. I appreciate all of your support. Have a great one.